This is just going to be a little video talking about the big news of the day, which is Coca-Cola has agreed to buy Costa coffee. Now, the deal is worth apparently £3.9 billion, which is, I think, $5.1 billion. And I think it makes, to some extent, a little bit of sense. We should give, I think, a tiny bit of backstory. So Costa is a UK coffee chain, started in the early 1970s, and in 1995, for the sum total of £19 million, it was acquired by a company called Whitbread, who had been brewers. They own a hotel chain in the UK, and Whitbread are a publicly traded company. Fast forward to today, and Whitbread had ended up being kind of forced by an activist investor into splitting Costa out as a business. So while Whitbread publicly traded, Costa Coffee are not. So the idea is Costa Coffee will become a separate standalone business, potentially to be publicly traded on the stock market. But what ended up happening instead is that Whitbread have agreed to sell it to Coca-Cola. From Whitbread's point of view, this is pretty great news. They have sold it for an enormous amount more than they paid for it, as well as what seems like a very rich valuation. So typically when valuing a company, we use a metric called EBITDA, which stands for earnings before interest, taxation, depreciation, and amortization. It's a pretty standardized way of measuring the profitability of a company, and whatever that number is, you might then add a multiple to it to create a valuation. Companies that have large potential for growth tend to attract higher multiplications, higher multiples of that EBITDA number. In this case, Costa sold for 16.4 times its EBITDA, which is a staggeringly high valuation. And so while Costa may have close to 4,000 cafes around the world now, that is still a very, very healthy valuation of that company. What makes that more surprising is that Costa as a business actually isn't doing all that well. It has been continuing to grow, but mostly through new store openings. Its like-for-like sales had been flat or actually on the decline. So as a cafe business, it definitely doesn't look that healthy. Why is this interesting to Coca-Cola? So Coca-Cola doesn't really have a strong coffee brand in its portfolios. Of its brands and products out there, I think 8 brands, I suppose, would be connected to coffee in some way, but there's nothing that is a solid, strongly coffee-focused brand for them. So Costa's interesting. And Costa right now has no ready-to-drink product. There is no Costa cold brew in shops to buy. They don't really do that. So Coca-Cola unquestionably must be looking at Costa as their solution for bottled, ready-to-drink coffee sales and growing the business that way. Now is actually a pretty tough time to sell soft drinks. There's increasing taxes on sugar, you're the bad person in the obesity epidemic, whereas coffee, bottled, canned, ready-to-drink coffee is unquestionably booming in popularity around the world. It's a growing category. So for Coca-Cola, this makes perfect sense. They're very good at putting stuff in bottles, but they're even better at distribution. And that's Coca-Cola's great strength, their distribution network and their delivery network, their supply network. It's not just the endless people in vans driving stuff all over the world. It's vending machines. It's every kind of distribution point that they have access to. And so for them to get a coffee brand that is sufficiently widely accepted that they could start to put that brand in every Coca-Cola vending machine and have it move, I think that's a real strategy for them. So the deal, I think, will go through early 2019, and I would say very quickly after that, I think we're going to start to see a lot of Costa ready-to-drink, bottled, canned, I don't know exactly what they'll do, but that format, that's going to be everywhere, and that's not really any particular insight from me. They've publicly stated that this is unquestionably going to be their plan. So they bought a brand that gives them access to a market through which they already have the distribution network. It's a sensible play for Coca-Cola, I guess, now that we've proven as an industry that ready-to-drink coffee is a category that's growing, that's meaningful, that's valuable, and that is here to stay. Now, as an addendum to this, I did make a video at the start of the year talking about some predictions, and one of them was that Costa would make a play into specialty. I still think that may happen. Like I said, the stores themselves are not doing that well. They're struggling in this market. And so they definitely need some sort of injection of something into the stores, into their retail bricks and mortar offering to make that business thrive a little bit more than it is. As I said, the like-for-likes are in a bad place right now, and they definitely know they must need to make a change. What that will be, I still don't know. But I would say it's still reasonably likely, regardless of who the parent company is, whether the parent company is interested in hotels or interested in soft drinks. For Costa, the problem remains the same. Their audience is not growing the way they want it to. So, there's my insight. There's my thoughts on this deal announced today. I would love to hear your thoughts in the comments down below. Let me know. If you want more of these kind of updates, let me know. Like this video. If you want to subscribe, sure, that would be nice. But don't feel like you have to. Thank you so much for watching. I hope you have a great day.